So, Peter, we're now about almost 9% off the highs for the S&P 500 and really for the NASDAQ. Are there opportunities out there at this point, or do you want to see more selling before you step into certain parts of the market, whether defensive ahead of the key uncertainties or growthier parts of the market that have worked better?
Yeah. Hi, Sarah. Yeah, it feels like a little bit like Groundhog Day, doesn't it? We talk about the rotation into value and small caps and cyclicals that fails to occur pretty much every month or so. And one of the key reasons for that, in my view, is because we're just not late enough in the credit cycle yet. Tight spreads in the public bond market alongside other more visible measures of liquidity belie sort of the problems that are going on underneath the covers. And that's really in the loan market, and lending standards are tightening. In short, I just don't see us on the other side of the credit cycle quite yet. And until that happens, value and growth, for that matter, both will continue to suffer ex-tech. So what do I like here? Well, I do think we need more of a correction. I think that's very clear to me and has been for some time. Price is not right yet to just jump in with both feet into broader equities, into small caps. But I do like right now certain special situations in good companies that may be seeing stress because of the pandemic. And those liquidity problems are becoming solvency problems for many of them, but many of them are still very good businesses. And so it's time to be selective and, frankly, to look at alternatives, outside just broad equity indices, commodities, and the like, and towards more esoteric kinds of investments until public markets reprice.
Peter, you like European equities, even though they feel like they're in the eye of the storm this week?
Well, it's interesting. I wouldn't say I like them, but one thing that's clear is that European equities have been much more sensitive, let's put it this way, to economic conditions, and they're down, I believe, double digits for the year versus the S&P 500 now, which is up a couple percent, as you pointed out. So I wouldn't say I like them, but on a relative basis, I think they provide an interesting comparison for how sort of overvalued the S&P 500 is right now relative to the underlying fundamentals of the pandemic and all of the other things we've been discussing.
Shepard Smith here. Thanks for watching CNBC on YouTube.